It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Hi guys, good afternoon, 25th of July 2019. It's 1:30 p.m. CT, 12:30 p.m. London or 7:30 a.m. Eastern. Piotr here, and this is a ECB day today. Finally this day arrived, so hopefully we are going to get some higher volatility. We are going to see some fireworks on the market. The main question is what's already priced in when we are talking about the euro dollar, for example, when we are talking about the price of euro overall. Is ECB about to save the world, or maybe not necessarily? Maybe this time Draghi is not gonna to try to play with President Trump trying to weaken euro. So maybe this time he's going to be the friend of President Trump. Meaning we are not going to get ultra dovish ECB comment, right? Overall, we will try to guess or discuss within the next 15 minutes ahead of the rate decision what might be the outcome. But as usual, we have to start with risk warning. Guys, please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay, time to switch to charts. As you can see, I do have Aussie Kiwi long position. We were discussing this as long as we are above yesterday low, there is a chance to see higher prices, retest of 104.50, 104.60. We'll see. If you were monitoring or if you were watching our morning meeting, especially from the DAX perspective, we hit that supply right at the Frankfurt cash open, and we are falling since then, right? So that was the quite good call this morning about the possibility what might happen with DAX. Now, of course, we are going to watch and monitor euro. So just briefly, because random just asked about the pound USD. So briefly about that pair. Again, I think that either we are going to see some supply around the Monday high, some kind of the over under. In that case, we are talking about 25 level, 25.25. So that's the zone, right? In case of the break higher, and I truly believe that there is a chance we are going to see that stop hunt to the upside, we might see a little bit higher levels, in that case towards 25.60. Overall, breaking above 25.25, we might see 25.80.26, the previous high. To the downside, we are trying to hold today. That's what we discussed this morning. We are trying to hold Monday low. In that case, we are trying to hold the zone over here, right? As you can see, so very narrow right now from the cable perspective here. All right, we have euro pound, and we are going to put euro Swiss franc here. So we are going to, you know, Aussie Kiwi is in play. We don't have to monitor this one. All eyes on euro, to be honest with you. I'm going to look from the euro Swiss franc perspective. I'm going to look, that might be the only cross we might see rising, even with overall euro weakening. We discussed it some time ago. The thing here from the higher time frame perspective, where we are compared to the left side of the chart. So we are talking about the 110 significant level, but we were discussing, I think 2 days ago, that probably we are not going to see any Swiss National Bank activity ahead of the ECB rate decision. We might see Swiss National Bank activity after ECB decision, right? So there was it's a third this week move below 110, right? We have some upper shadows, and really I'm very curious what is going to happen here on euro Swiss franc, especially if we are going to see very weak euro overall. Now euro pound, from the early chart, that's what we discussed yesterday. We do have this possible head and shoulders pattern going on. I've mentioned I'm looking to sell that one. I'm looking to sell that one on the rise towards 89.60. Overall, I'm looking for the breakout or breakdown zone from yesterday as a selling opportunity. And so euro Swiss franc is all about the euro to the upside. Euro pound is all about the downside. And here euro dollar, we discussed euro dollar in details this morning. So if you haven't watched yet, I think it's a good idea to check our morning meeting. Go to the archive section here on Liteforex Global YouTube channel and check our morning meeting. We are discussing in details. There is a possibility of those equal moves we had to the upside, right? That's the one thing we discussed. Then there is a possibility of this equal move to the downside. We discussed as well, right here, here, and the last one over here, right? And now, in case of continuation to the downside based on the same pattern, right, we might see this 1080, 1060. That's from intraday perspective. But in case of spike to the upside, we know that the key psychological level is close to 1225, 1250, and it looks like if we are going to see the equal move to the previous rise, it might just hit that level, especially that in both cases we have these red lines in place, and just a reminder, red color represent what is going on monthly chart, so we know that's the quite important levels based on the monthly chart. We shouldn't forget about the durable good orders as well from US. We shouldn't forget about the US GDP tomorrow, and we shouldn't forget about the FOMC next week. So now the main question is, because you know there are always plenty of different scenarios. That's, you know, I'm going to focus on actually on two majors, right? if you are going to get the cut and ultra dovish comment, then of course I'm not sure if I'm going to have enough time if to jump into the falling train, or which might be the case when I'm talking about this, you know, suspicious theories. It might be that you know, Draghi would not deliver. We are not going to see the shock, right? Because I think, and I've mentioned this previously when we were talking about the FOMC, Draghi might not deliver today, because if he is going to sound like dove, ultra dove, it finally might scare the market, right? Meaning that the bad news is going to be really bad news. And especially right now, during the summer holiday, when the liquidity is lower, those big guys, those central bankers, they don't want to have any downside fireworks, right? So he may not want to make that. He may not want to try to scare much market, meaning that he is going to be just dovish, and that's what I think is already priced in euro. Boom. Okay, so what we are going to see, and we are going to get within the next 2 minutes, we are going to get the decision, we are going to get the statement, but overall I think today the conference might be, I don't know, but I think might be the key here. So overall, right now, right here, let's have a look what we are going to get from the rate decision perspective. So we know upsides and downsides, so I'm going to make some cleanings. I'm going to remove these yellow boxes. Overall, we are still inside the bigger daily demand zone, where around 1120 we have also monthly line, I mean red line, meaning some levels related to the monthly chart. Whoops. 1, 2, 3, 4. What was it? And there you go. Good luck, everyone. 20 seconds left. Don't try to chase the market. Probably that might be the name of the game. Don't try to chase the market. Euro is rising, guys. Euro is rising. Just quickly, first, ECB leave rates unchanged. That's huge. That's what I've been talking about. Now the question is about the statement. I have to check what we have, where we have it. So now it's all about Draghi press conference. It's what Reuters and Bloomberg overall expected. But as I mentioned, there was some comments and market expectations about the shocking ultra dovish statement. The governing council underlined need for a highly accommodative stance of monetary policy for a prolonged period of time, as inflation rates, both realized and projected, have been persistently below levels that are in line with its aim. Accordingly, if the medium-term inflation outlook continues to fall short, it's determined to act in line with the commitment to symmetry inflation aim. Ooh, okay. So that, but about this we've heard some time ago, right? We saw this euro spike to the downside a few days ago when there was a leak rumors about the possibility, right? ECB will reinvest bond proceeds for extended period of time. So it's all about Draghi, but I think 111 might be tested. Then, guys, we have to remember about the option market, right? It's huge. It's huge between 1170, 1225. It's more than 3 billion inside this 50 pips zone, right? So it might be the case we will try to revisit 111, look for stops towards 1080, 1060, and try to rally based on that higher, right? So ECB overall rises prospect of tiered rate, new net up at guidance change. ECB staff will examine options for tiering potential quantitative easing. Some longs right after the data or right after the event being trapped already. DAX is trying to retest the high, and that's the supply on DAX. On 30-minute DAX, that's the another supply, and we have this zone we discussed as well, so it might be the case. I would think about the short DAX around 12,585. The thing is that we have Google and Amazon after the bell in US. Ugly candle, ugly. But we know right now, with close above the spike higher, gonna be bullish, short term. So overall, looks like what is working here, the thing that ECB will examine options for potential new asset buying. So that's the key here. So we are going to get more during the press conference. Looks like I missed the one around the short around 80-90. Not sure if you are going to retest this 80. It might be that it was the quite smart move. Okay, short term, some shorts might be forced to cover, but overall, it is some kind of the building the stage for the cut. And Euro Swiss, we were discussing this, the one which might be very, very positive here. Dear Mr. President Trump, it's time to wake up and tweet something about the strong dollar. So in that case, if we are about to make the So let's examine that one. That was about the size of this, alright. So if we are about to fall from here, so it's 1080, and 1080 we discussed that it's the next possible demand from the intraday perspective. So that might be the case. I would be very careful trying to chase here. Let's switch lower. Time frame. We have a 3 minutes towards the top of the hour. Actually, gold bulls looks like they love Draghi comment. That's possible supply. Intraday chart. Well, I think we are going to retest this daily swing high. So we are going to finish the business eventually. If not, hitting new high. Supply higher towards 1460. Algos trying to push DAX higher towards the top of the hour. 1 minute left. I like this short somewhere inside this supply. We'll see. Overall, I would say we have a chance for fireworks during the Draghi press conference and then around the US Cash Open. So bears on Eurodollar trying to open New York at the lowest possible level. So compared to yesterday opening on Eurodollar, we have gap down as far as I am aware. So that was the New York Open over here. So yeah, that's the gap down. So watching carefully this zone. I think it's worth to watch this one. Let's watch 2-3 minutes longer in case of any move. Then we will make the break towards the press conference and US data. Here is a full statement. It was good yesterday, right? From the intraday perspective, we were discussing this morning about yesterday's shorts. Unfortunately, I was not able to reopen. I've been waiting for some kind of a little bit higher spike. Didn't work out my way on euro pound. So with this type of the candle, we are bearish for sure, at least towards 1080. Looks like because of this breakdown, looks like we have supply in between 11.17, 11.22, 27.34 as a stop. We'll see. So I'm watching this 1722 in case of attempt to move a little bit higher here. I would prefer the bottom of this rising candle right after the decision, right? That's what we have here. That's what I've mentioned, that it's much more worth to watch. But we will see what we are going to get here. And above 40 and above the spike high 60, that might be bullish short term. So this no cut, you know, one may try to read that as no shock. So they were no, ECB was not in rush to cut, right? So in that case, that might be euro short-term positive. On the other hand, others may argue, but they built strong stage, they are going to cut next, right? But it's some time towards many things may happen. It could be to be honest with you, I can say that Draghi was trying to be friendly towards the President Trump today, and they made the decision, let's wait and see what Fed is going to do. That's what we were talking about the beginning of our meeting, right? All right, 24 minutes towards the US data, towards the press conference. I'm not gonna do anything right now. So let's have short break, and I'll be back right ahead of the press conference and US data. So enjoy the break. The bar is open first time today. Coffee, tea, mineral water, whatever you want. Non-alcoholic drinks only. Enjoy the break, and the charts are staying with us, and I'll be back within the next 20 minutes.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Welcome back, guys. We are awaiting, you can hear, I'm awaiting the ECB press conference. I'm going to watch that one. If it's too noisy, let me know. I will try to make it a little bit lower. What is going on, guys? The currently September meeting has 10 basis points cut priced above 90%. All right. So looks like, yeah. For now, the market's takeaway is we are going to see the cut 10 basis point in September. We got US data, advanced good trade balance for June 74.17, estimation 72.5, weaker. Initial jobless claims 2006 versus 2018, better. Preliminary wholesale inventories plus 0.2 versus expectations 0.5. Durable good orders 2 in June versus 0.7 expectations, prior minus 1.3, ex transfer 1.2 versus 0.2 expectations, prior 0.4. That's how it looks. So as I mentioned before, the only cross where euro might go higher might be euro Swiss franc, but there was not enough space for me to try to take the advantage. We hit the target. I've shown you where is the target during the break. There was no margin to try to trade it, at least no margin for me for now.
Ladies and gentlemen,
okay, Mr. Draghi is live, so I'm going to listening, and we are going to monitor closely.
We now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular and monetary analysis, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels.
Huge move on the 4 hour on the euro
through the first half of 2020, and in any case for as long as necessary to ensure the continued sustained convergence of inflation to our aim over the medium term. We intend to continue reinvesting in full the principal payments from maturing securities purchased under the asset purchase program for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. The Governing Council also underlined the need for a highly accommodative stance of monetary policy for a prolonged period of time.
Highly accommodative stance for a prolonged period of time.
Realized and projected have been persistently below levels that are in line with its aim. Accordingly, if the medium-term inflation outlook
Guys,
continues
remember,
to fall short of our aim,
because of the
the Governing
previous
Council
markets
is
move,
determined
we
to
were
act
checking the
in line with its commitment to
distances.
symmetry in the
1080,
inflation aim.
1060. That's
It
where
therefore
bounce may
stands ready
come
to adjust
eventually.
all of its
Be careful.
instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner. In this context, we have tasked the relevant Eurosystem committees with examining options.
1075, we have more than 750 million in expiration.
Mitigating measures such as the design of a tiered
Talking about
system
euro-dollar.
for reserve remuneration and options for the size and composition of potential new asset purchases. Incoming information since the last Governing Council meeting in early June indicates that while further employment gains and increasing wages continue to underpin the resilience of the economy, softening global growth dynamics and weak international trade are still weighing on the euro area outlook. Moreover, the prolonged presence of uncertainties related to geopolitical factors,
That's what I
the
missed.
rising threat of
This stop count
protectionism
above yesterday high.
and vulnerabilities in emerging markets.
I have to frankly say
is
I missed that
dampening
one.
economic sentiment, notably in the manufacturing sector. In this environment, inflationary pressures remain muted,
That's the mistake.
and indicators of inflation expectations have declined. Therefore, a significant degree of monetary stimulus continues to be necessary to ensure that financial conditions remain very favorable and support the euro area expansion.
Dear Mr. Draghi,
Support
where are
the
you
euro
going
area
to
expansion,
buy all
the
those
ongoing
printers
build-up
to
of domestic
print
price pressures,
such a
and thus
huge amount of the
headline
euro?
inflation developments over the medium term? Let me now explain our assessment in greater detail,
Greater
starting
details
with the economic
explanation.
analysis. Following a rise of 0.2% in the fourth quarter of 2018, euro area real GDP increased by 0.4% quarter on quarter in the first quarter of 2019. Incoming economic data and survey information continue to point to somewhat lower growth in the second and the third quarters of this year.
Second,
This
third quarter
mainly
lower
reflects
growth,
the ongoing
expectation of the
weakness
lower
in
growth.
international trade in an environment of prolonged global uncertainties, which are particularly affecting the euro area
Yes,
manufacturing
that's the
sector.
good reason for DAX to be at
At the same
12,600.
time, activity
All
levels in the
those
services and
trade
construction
tensions,
sectors are
lower
resilient,
growth,
and
second,
the labor
third quarter.
market is
That's
still
all
improving.
positive for DAX, of course.
Looking ahead, the euro area expansion
Congratulations,
will continue to be
bulls.
supported by favorable financing conditions, further employment gains, and rising wages, the mildly expansionary euro area fiscal stance, and the ongoing, albeit somewhat slower, growth in global activity. The risks surrounding the euro area growth outlook remain tilted to the downside, reflecting the prolonged presence of uncertainties related to geopolitical factors, the rising threat of protectionism, and vulnerabilities.
Looks
in
like market is
emerging
trying to
markets.
position
Euro area
to the long side on dollar yen
inflation
ahead of the
increased to
probably
1.3%
more dovish Bank of
in
Japan.
2019 from 1.2% in May, as higher HICP inflation, excluding food and energy, more than offset lower energy price inflation. On the basis of current futures prices for oil,
What about
a headline
Aussie
inflation
Kiwi?
is likely to decline over
We
the
talked
coming
about
months
morning and
before
you've
rising
seen
again
yeah,
towards
it's
the end
still
of the year.
around the entry level.
Looking through the recent volatility due to temporary factors, measures of underlying inflation remain generally muted. indicators of inflation expectations have declined, while labor cost pressures have strengthened and broadened amid high levels of capacity utilization and tightening labor markets. The pass-through of cost pressures to inflation is taking longer than previously anticipated. Over the medium term, underlying inflation is expected to increase, supported by our monetary policy measures, the ongoing economic expansion, and stronger wage growth. Turning to the monetary analysis, broad money M3 growth stood at 4.5% in June 2019 after 4.8% in May. Sustained rates of broad money growth reflect ongoing bank credit creation for the private sector and low opportunity costs of holding M3. The narrow monetary aggregate M1 continues to be the main contributor to broad money growth on the components side. The annual growth rate of loans to non-financial corporations.
So for now, inflation likely to decline in coming months and rise again towards end of the year.
Notwithstanding some moderation from the peak
that might be behind this
September 2018,
pop on euro dollar right now.
The annual growth rate of loans to non-financial corporations continues to be robust. The annual growth rate of loans to households also remained unchanged at 3.3% in June, continuing its gradual improvement. Overall, loan growth is still benefiting from historically low bank lending rates. The Euro area bank lending survey for the second quarter of 2019 indicates that loan growth continued to be supported by increasing demand across all loan categories. At the same time, credit standards for loans to enterprises tightened in the second quarter amid concerns about the economic outlook, while they remained broadly unchanged for loans for house purchase. Our monetary policy measures, including the forthcoming new series of targeted longer-term refinancing operations, so-called TLTRO III, will help to safeguard favorable bank lending conditions and will continue to support access to financing, in particular for small and medium-sized enterprises. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is still necessary for the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary policy measures, other policy areas must contribute more decisively to raising the longer-term growth potential and reducing vulnerabilities. The implementation of structural reforms in euro area countries need to be substantially stepped up to boost euro area productivity and growth potential, reduce structural unemployment, and increase resilience. The 2019 country-specific recommendations should serve as the relevant signpost. Regarding fiscal policies,
so let's watch this 11.25.
The euro area fiscal stance is providing support to economic activity. At the same time, countries where government debt is high need to continue rebuilding fiscal buffers. All countries should reinforce their efforts to achieve a more growth-friendly composition of public finances. Likewise, the transparent and consistent implementation of the European Union's fiscal and economic governance framework over time and across countries remains essential to bolster the resilience of the euro area economy. Improving the functioning of economic and monetary union remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the Banking Union and the Capital Markets Union. And now we are at your disposal for questions.
Annette Weisbach, CNBC. Mr. Draghi, could you perhaps elaborate whether this decision to kind of pre-announce a potential package as soon as September was taken unanimously? And the second question would be on the potential APP. Are there any restrictions in terms of asset classes, or do you look at the whole variety of what is out there? Thank you.
Thank you. First, let me give a sort of a summary account of our discussion as it's taken place. First of all, the first discussion where there was broad agreement, broad convergence of views, was the assessment of the current outlook. Namely, an outlook where you still see signs of strength in the economy, as I just read. Labor market and nominal wages growth support consumption. Generally speaking, you have resilience in the service sector and the construction sector. At the same time, this outlook is getting worse and worse. And it's getting worse and worse in manufacturing, especially, and it's getting worse and worse in those countries where manufacturing is very important. But because of value chains, this propagates all over the Eurozone. And so this must be taken into account.
So above 25, the bears might be in trouble.
Basically found to be in the
And then
general uncertainty.
It might be over under around 55, move above this level.
And which relates, as I said many times, to
Right post-rate decision spike high.
Now
it might be short-term bullish.
A hard Brexit certainly is another factor to take into account, and the slow rotation of Chinese economy. All these factors and probably others are affecting the present outlook.
I'm going to try to take
so that's the
half here.
Our projections, last projections, were in a sense
7 pips
suggesting
stop.
that we might have had a rebound in the second part of the year. Now, incoming signs show weakness of growth in the third quarter.
So half of the exposure and a very tight stop.
And all in all, the balance of risk was assessed to be on the downside for the reasons that I've just mentioned, and also for the very fact that the simple, and this point I've made it other times, the simple prolonging, lingering of this uncertainty is by itself a materialization.
Okay, so we
risk.
broke
And on the inflation side,
through 25, and we are speeding up a bit. I'm not gonna chase here.
Below our aim, and we see
Let's have a look what we are going to
that
get
says
around
that
55.
convergence is further out in time. Though, as I've said on another occasion, the informational content of market-based inflation expectations.
So now,
has to be assessed, taking into account.
that's the latest place where markets show the weakness. Also, red line related to my monthly chart. So it's around 11.15.
Expectations also gone down. So that's what led the Governing Council to these proposals, to the various proposals. And if I can go through them again.
So the initial plan was using the size of the move ahead of the rate decision. It didn't work out. It was just the first attempt was upper shadow. Then we broke through. So squeeze might come here. Right now I'm watching 11.15, 11.55.
See in the set of proposals all over a consistent degree of optionality, very much in the same way we've done on other occasions. We intend to continue reinvesting in full the principal payments from maturing securities purchased under the asset purchase program.
Maybe even 25.15, the zone here.
In the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and ample degree of monetary accommodation.
That's not...
Then
I don't need that one
to
anymore.
this point,
I would like to see retest of
besides,
15,
underlining the
25,
need for a
15
higher
maybe.
accommodative stance on monetary
We'll see.
policy for a prolonged period of time, and the acknowledgement that inflation rates, both realized and projected, have been persistently below levels that are in line with our aim. This again is...
So we hit that zone we discussed. Now we have another upper shadow.
And then it says, accordingly, if the medium term, this is the trigger for our action, which basically reflects very much what I had said in Sintra. Accordingly, if the medium-term inflation outlook continues to fall short of our aim, the governing
So let's
council
get back
is
to the
determined to
history.
act, and that's the third point, determination to act. And then there is another new language here, in line with its commitment to symmetry.
What we discussed this
in its
morning as
inflation
well.
aim. So that's another part of the language here that's new.
So
And that
levels
says,
around the
again, what I said
Monday
in
range
Sintra, but
are
in one step
possible.
forward, namely that we stand ready to adjust all of our instruments as appropriate to ensure that
So
inflation moves towards,
what I'm
let's say,
going to
this
try to
sustained
check
manner.
here,
And then we say, again, another piece of, another new part is that we've tasked the relevant Eurosystem committees. So we not only affirm our determination, but we move a step forward. And we task the committees with examining options, including ways to reinforce our forward guidance on policy rates, mitigating measures such as the design of a tiered system for reserve remuneration and options for the size and composition of potential new net asset purchases. So to answer
what was the pullback
was this unanimous? We didn't actually, we have a broad discussion. On certain things we converged, like the outlook. On other things, most people converged with this, otherwise we wouldn't have this in the introductory statement.
34 pips.
Again, whenever we have a package so complex as this, you would expect that people have different nuances about different parts of the package. The point is that it was approved as package
1134
after
that would be in that
fairly
case.
broad discussion, but converging to what I've just read.
So
to
the
you.
pre,
So
so
that's
the
what it is at this
ECB
point in
levels.
time. I think you asked me more specifically about the mandate to the
and
committee.
it might be bullish soon.
We have all the list. That's where we know. That's where we stand, ready to act, and that's what we have had in the past, and that's what the language says, basically. Thank you.
Mr. Canepa?
We'll see if we are going to get this type of the move again, similar to what we've seen in the past.
So the first question is about the ECB's objective. The close but below 2%.
And the Monday high might be the target with this initial move.
It's in your introductory
Then
statement, but not in the decision. So does that mean
not a
something?
big
Can we
correction
expect the
of
ECB to
probably 34
rephrase,
again.
redefine its policy
40.
objective?
40,
The second
42.
question is about the constraints that the ECB has chosen to force upon itself on the PSPP. Now there are two key constraints. One is the capital key, and the other one is the issue.
Euro Swiss breaking higher.
While
So
they are
now
both,
for me, switching to 1 hour, looking for
choice
the
of the
latest
ECB,
move to the downside as a manipulation.
the
So
issue, limit
overall,
also has to do with the issue of not becoming a blocking minority. Does that mean that that constraint should be regarded as harder and more difficult to get away from, rather than
that
the
was the
capital
move
key,
to the
which is
downside.
entirely
So I'm
discretionary
looking for
and decided
these
upon by
levels.
the ECB?
Thank you.
On Euro
the
Swiss.
on the second question, I'll be in a better position to answer you in September. We didn't discuss that. For the time being, however, you can refer to my Sintra language, the language in my speech in Sintra, where I talked about the headroom and the limits and how to view these limits. On the other point, no, there isn't any change, really. In fact, it's true, it's not there in the first page, it's in the fourth page, it's just what it is. But we had a discussion about symmetry, and so we, and there is a sense in the Governing Council that there should be a reflection on the objective, namely it's a close but below 2%, or should we move to another objective? There were different the governing council members suggesting that we should carry on a reflection on this. Now, it's an important change, so we just want to think about seriously. In the meantime, however, the main thing in this introductory statement is that the governing council I think I had said this many times, but now it's open. It's in the introductory statement. The Governing Council reaffirmed its commitment to symmetry around the inflation aim, which is, in this sense, is 1.9. It's basically close but below 2%. At the same time, we say we don't like the current inflation. So no question about accepting a lower inflation as we are seeing today. I think these two things must be read together. And so the bottom line of the discussion that I reported to you before is that basically we don't like what we see on the inflation front, and symmetry means basically that there is no cap of 2% cap, that that inflation can deviate on both sides. We don't accept permanently lower inflation rates, and symmetry means that the Governing Council will act with the same determination whether the inflation is above or below the inflation aim. I think that's important to read it in the full context. Please.
Ms. Jones, please.
So looks like it's all about
Financial Times.
this decision here.
for my
So
first
the
question,
range we have
Like to
here,
follow up on your answer to Ms.
trying to
Rosberg's
halt
question. You
above.
mentioned there were some disagreements about nuances. Would it be maybe possible to detail them a little bit more, whether there was any debate on any size of any package or any scale or timing of a rate cut that most people now suspect will happen?
congratulations
in September?
to those who were
My
trading
second
DAX.
question, we've seen quite a lot of bad data this week, notably on German manufacturing and German companies more broadly, I think, in the EFO today. That led to some expectations of action as soon as today. Was there any discussion of that at the Governing Council meeting this morning?
I'm sorry, discussion about the
About
situation.
taking action as soon as today, basically, to do a rate cut as soon as today, or other measures as soon as today. Thank you.
Thank you. Now, nuances were
Still might be
mostly
the chance they will try to finish the
on
business.
about what to do, whether we should have a package, what to do first amongst this list of instruments. There was
Looks like the
no
key, and
doubts,
we
well,
were
you
trying
know
to
that
hold
some
during this
council
first
members have doubts
rejection.
about the two-tier
Now it's gonna
system.
be interesting.
So we had that as well. And now the statement says that if we are to lower interest rates, that will come with mitigating measures. And that is quite now that's quite clear. So nuances were of that sort of nature. There was no absolute exclusion of any instrument, and that's reflected well in the breadth of the mandate that's being given to the committees. Now, on the second point, you asked whether there was any discussion today. No, there wasn't. There wasn't because the sense is that we see an outlook. Well, first of all, on the inflation front, we don't like what we are seeing. That's very important. Second, we see an outlook which is, in a sense, let me just step back and recall, in the last G7 meeting, when I was asked to make the assessment for the euro area economy, I said, look, it's difficult to be gloomy today because the present situation is one where you see signs of strength. At the same time, you see, especially in certain sectors, in certain countries, a quickly deteriorating economic outlook. And given that we had the last June projections, we decided that we want to see the next projections before taking action. And also the sense that all this is pretty complex and needs preparation. Thank you.
Mrs. Skolimowski?
At least Aussie Kiwi is trying to
Definitely,
recover
Mr.
some losses from
My
euro
first
dollar. That's
question,
good. One.
Is about the tiering system, because you mentioned obviously that you task committees to look at tiering system.
All right, so we
you
are approaching
taking
top of
any
the
the
hour,
systems that are already in
and
place
looks
in
like
various
euro is
countries as a
stronger. So we
benchmark,
are
as
about
your
to see.
reference point,
Probably we are
because
about to see some
probably the only
squeeze
central
higher.
bank with
And looks
negative
like
rates
based
doesn't
on
have
many different
mitigating measures. So
easy
I
tools
assume
we were
it's more
trying to
difficult
implement,
introduce
looks like the weekly
commodities
open
to
might be targeted. I'm not saying
If you
today,
could tell us
but
a
over the
little
course
bit
of
more,
today and tomorrow towards the end of the
about
week, so
that.
we might
Also,
build, we might
my
try to
second
build
question,
lower shadow
you
on
talk
the weekly
also,
chart.
Also about the committees, you said that they will look at the options about the size and the composition of the net asset purchases. Does that mean you do not exclude the possibility that other assets could be added to the program if it's relaunched? Thank you.
Look, both questions. We placed ourselves in the hands of the committees. So first question is, what shape will the tiering system
We
have?
still didn't take out the high
Just we have
post
to have the
spike,
committees
post
work
rate decision,
and
spike high.
decide how to design the system. And certainly the experience of other countries' central banks will be certainly an important element in this design, but we are in the hands of the
Okay.
committees. Same thing with the second.
Looks like we
wanted
took
to
it out.
have a broad
So
mandate,
market found the
not that
liquidity.
broad after all.
So overall,
Is
when
we live in some
one can
leeway for the
argue
committees
that
to
we might
reflect
try to target this
because of the
eventually
complexity of the
inverted head and
situation,
possible inverted
so
head
they
and
have to
shoulders.
process
I would
many-
rather call it some
many-
kind of the
many
cup
aspects
and
of
handle.
it.
Anyway, watching for 25.15 as a possible buying opportunity, we'll see. Once we are going to make such a pullback, I'm going to switch to lower time frame, like 5 minutes or 1 minute, and then I will decide if I want to join that move.
Formally changed, or that there would have to be some kind of formal agreement about shifting the strategy of the ECB on that. And has it happened? And my second question is, it was relating to the previous question. Was there any discussion about the size of a potential rate cut or the types of assets that you might look into buying?
The answer to the second question is no. No, there wasn't any. As I just said, it was a meeting where it was based on two. If I just try to summarize it, the main lines of the meeting. One was an assessment of the current growth outlook and especially of inflation, current and projected. As you know, I mean, inflation expectations now have been at historical lows for some time. I mean, so we have to consider that. With the admission, and that's again, I stress this, very important. With the admission that we don't like
That's the
this.
1 minute chart.
And the second part was based on how to, in a sense, design this preparation, but not really discussing.
All right, we will see if they
various
want to repeat the
aspects.
history.
Not really,
Just a
not
reminder
discussing
to
them at
what
all,
we
really.
were drawing here. So we might see this kind of the pullback we have here. We had had here.
But, Mr. President, you've said that the outlook is getting worse and worse, and that
We know
rebound
what
of
we
the
are
economy
targeting,
is
so I'm going to
getting
remove that
more unlikely.
orange background.
So would you agree that the risk of a recession in the euro area and especially in Germany has increased? And my second question, US President Trump has recently again accused the Europe of currency manipulation.
I was not aware. I mean, with the latest. I'm sorry, interrupted. But go ahead.
Wasn't it before? Yeah, but do you fear that the international consensus to avoid currency war will fall apart now? Or thank you.
Thank you. First,
Okay,
answer
now
to
it's
the first
gonna.
question is,
I think
no.
it should be interesting
No, we
right
still
now.
see the risk of a recession as being pretty low, all in all, and we still see signs of resilience in the labor market, which continues to improve, admittedly with a lower and lower momentum. But we are going from a peak to peak here in terms of jobs created, in terms of unemployment rates, in terms of employment rates, in terms of dispersion across countries as well.
And based on this early chart,
and also
this type of the
the
pullback from
wage
here
growth is
would
above
meet this
historical average. household wealth is also support.
Post-rate decision reaction to the downside. The block over here, so it might be accumulation of the longs to the downside, right? We were discussing this during the webinars we held in June. Just reminder, we held 3 webinars, and we were discussing when the big guy wants to buy, the initial reaction might be opposite to what his intentions are, right? So they are not chasing the prices. It looks like it might be the case here post ECB rate decision.
In the sense, what's hitting the manufacturing sector in Germany and also I think in Italy, and to a lesser extent in other countries, is what you would.
All right, guys, time to make the pullback.
And here, in a sense, is what comes.
I'd like to join somewhere.
What becomes really very important, and that is fiscal policy. We said that here, I've just read that a mildly expansionary fiscal policy is supporting activity in the Eurozone area. But at the same time, pound is trying, the bulls are trying penetrate 25-20.
It's
questionable that fiscal policy, a significant fiscal policy, mostly in some countries, but also.
But in regards to the cable we discussed this morning, what's the drill? What was the drill? Trying to hold the low here around the Monday low.
Monetary policy has done a lot.
The block here, Riley base, Riley,
continues, as you can
and
see today,
we visited these levels twice.
But if
Monday high is testing right now. We are testing right now. Over under is possible here. Be careful.
I'm sorry, you had a second. You're right. You had a second question. Now, I can restate what I said in Sintra. We don't target rates. Our mandate is price stability, and we have an international consensus about avoiding competitive devaluations, and we stick with that international consensus, which has
no comments. Was too focusing on euro dollar. Congratulations to all of you who were able to grab on the retest of this supply.
There have been these various observations, and we simply restate.
It's hard to say all of them, and at the same time doing the conversation. So still focusing on euro dollar, and still the plan is what we discussed.
On the package, and one is, given that mitigating measures are now to be looked into, does it mean that
no one in the chat window said, "Come on, DAX is testing again"? You just grab for yourself, guys. Come on.
And if it is not at
we need to cooperate.
Level, are there some states or some banks that are closer to a reversal rate? And then another question is on the order of the instruments in the package. I've also seen that in the accounts. Is it random, alphabetical order, or can we look into first rates and then QE? Thank you.
Thank you. Legitimate questions, both of them. I mean, the second one, the answer to the second one, no, it isn't any order. And it's deliberately so. Because, and even whenever I said that all instruments are on the table, I myself have been very careful about not saying what we'd like more, what should come first, whether they should come together, or whatever. It's just that we are not yet at that stage. The other question is about, are we reached the reversal? No. We see no sign of that. The point to be made is that on the last occasion when we extended our forward guidance, last June, not mistaken, analysis would show that at that level of interest rates, or this level of interest rates,
overall on euro dollar, it's a nice V formation.
Guidance, the consequences on the profitability of the banking system were not significantly negative or negative at all. In other words, there was no evidence that this would have any significant impact on that. So now we have to see if the further
no pullback yet,
or even possibly what we're not talking about now, about this, a different calendar would affect banks' profitability. That's what basically. So, but we are not at the reversal rate as it was. Certainly that is a danger for protract the negative rates for a long period of time. But basically the sense is that, that we have to consider them.
Mr. McHugh?
Dave McHugh, Associated Press. If 4 years of QE and 2.6 trillion didn't do the trick and achieve the goal, how would more QE help, and what would be different?
Well, what's happened really is that we had each and every time. First of all, it didn't do the trick. It did the trick because it raised inflation from where it was in 2014 on up. Now, at the same time, we had the materialization of a variety of risks. So what monetary policy has done is really counteracted the influence, the effect.
Don't forget, right now, we are testing the huge 50 pips zone related to the option expiration. Just a reminder, we were discussing this morning. 1170, we have almost 800 million in expiration, right? And we just tested 1170. Then 112, we have 600 million in expiration. 1210, we've got almost 800 million in expiration, right? And 1225, 1 billion in expiration.
Over a 5-year time, 6-year time, and never so many jobs being created in this part of the world over such a stretch of time. So we lay out the conditions for the price, for the cost pressures to be passed into price pressures. Now, this pass-through is taking longer than...
All right, guys, I'm going to watch the charts, but it's time for a second break today, so bar is open, coffee, tea, non-alcoholic drinks only, so enjoy the break. I'll be back around the US Open.
It's not something that we are experiencing only in euro area, as you know. It's pretty spread, but that doesn't really exempt monetary policy from undertaking its task and doing what is necessary to make a fool to achieve its objective. And again, if I can repeat, here is fiscal policy, which will be soon called into action. Thank you.
Mr. Stumpf?
Hi. Now that we know the name of your future replacement and that the Governing Council has found no objection, have you given a thought to what you will do at the end of your mandate? And I mean professionally, of course. And I have a second question. I would like to ask about the judicial process of BBVA and how it has evolved in the last days. Is the ECB worried at all?
Now, on the first question, I haven't come to a determination of what I will be doing in the future. But let me say one thing about my successor. I think she'll be an outstanding president of the ECB. And I'm saying this with the knowledge that comes from having known her for longer than she and I may like to remember. So that is, and also, I mean, if you think the way decision-making is being actually done in the IMF, it's collegial. It uses the vast input of the staff, of economists. It involves discussions with colleagues, with the staff, with the various parts of the IMF. It isn't much different from what we do at the ECB. Thank you. Oh yeah, we had a question about that. Sorry,
Well, you know, it's very simple. As you are fully aware, you know, this is in the hands of the Spanish justice, and we have to wait for the decisions taken by the judge.
Mr. Conti?
Good afternoon, Mr. President. You mentioned an idiosyncratic shock in Germany and Italy, and then you mentioned a very important fiscal policy. I don't know if the two things are related, so my question is about a clarification of this. Because, of course, as we all know, the fiscal positions of those two countries are very different. Can you explain further on this?
I can say that looking back at all our experience, and comparing it with what happened in the United States. And by the way, I think I went through this comparison in my speech in Sintra again. You see that a supportive fiscal policy allows monetary policy to perform the same task as we did with less side effects and faster. That is what, now, when the outlook deteriorates, this becomes more and more important. That's what it means. For me, going beyond this at this stage would be premature. But I think we should have this in mind.
Mr. Barbera?
Alessandro Barbera, La Stampa. Mr. Draghi, I'm connecting to the question to my colleague Conti. When you talk about monetary policy, fiscal policy, you're talking about investments, public and private investments. You're talking about, we have problem with the export-based model, particularly in Germany. Are you talking about this?
No, not, I mean, I haven't reached that degree of specificity. I think fiscal policy was important, is important, will be even more important if the economic situation deteriorates everywhere. And I think fiscal policy should be pursued maintaining credibility on the markets, because if you expand and interest rates go up, then of course you frustrate the main aim of fiscal policy. So this, but the main thing is that the main thing is what I said already. It's really important, and each country has its own agenda on what is the best fiscal policy to be activated against idiosyncratic shocks. So, thank you.
Mr. Huyton?
Thank you, Luke Huyton, Market News. Mr. Draghi, in the last couple of weeks, members of both the Executive Board and the Governing Council have given speeches that appeared to call into question the relevance of market-based inflation expectations to the monetary policy making decision process. Today's announcements, however, might appear to lend some support to those same market-based expectations, and I wondered if you could say a few words about that. And my second question was, why did the Governing Council choose to retain the calendar-based leg of the forward guidance today?
I'm sorry,
The calendar-based leg of forward guidance. Was there any discussion of discarding or just amending it?
The answer is that, frankly, as again, we discussed not the substance, but when to discuss about this, which is September. As you see, the statement, the introductory statement here says, when we come to page 2, it says, in this context, we have tasked the relevant Eurosystem committees with examining options, including ways to reinforce our forward guidance on policy rates. So then you can see that the mandate is broad there. We have the committees, they will think and they will discuss and they will make proposals to the Governing Council on the occasion of on the occasion of the next projections. On inflation expectations, it's true, it's market-based inflation expectations are being questioned for a variety of reasons. Whether we should, are they a reliable are they a completely reliable indicator? And then different expectations, perhaps some say more relevant to the real life of people, of individuals, or to be considered. The point is that we still have that as a yardstick, and it would be a mistake to be complacent about that, which doesn't rule out an examination of all these other expectations. But keep in mind that the survey of professional forecasters' expectations have declined as well. And that is, again something I would point your attention to, because SPF expectations have been pretty steady for a long period of time. So the fact that they too have gone down is something that we should look at.
Ms. Scheler?
Yes, thank you, Mr. Draghi. Some economists say that when people assume rates will stay very low anyway, they might no longer invest or hurry up investing because there's no point. So what do you say about that?
I'm sorry, if the rates stay low for a long time?
Yes, if now we have to anticipate rates staying low for even longer, that there will no longer be any effect on investments because people think it doesn't matter, we have time forever, basically.
Well, first of all, that's not what we are seeing in construction. I think people basically want to buy houses. Houses get built. And as you can see from houses valuations, they are going up in several parts of the Eurozone. So I'm not sure that this negative conclusion about the effectiveness of rates, of lower rates on the economy is warranted by facts. That is, but certainly we have to ask ourselves, are all these instruments going to be effective forever? I think that's a legitimate question to ask. And we believe they are, and are there decreasing returns? Maybe they are as well. But would that exempt monetary policy from making what is necessary or what we believe necessary based on the current information? The answer is no.
Mr. Di Vittorio?
Le fonti, like my colleague on fiscal policy. Some countries could do an expansive fiscal policy, but they don't want to do it. Other countries would like to adopt an expansive fiscal policy, but for budgetary reasons they can't. In this context, monetary policy can do a little, and we must resign ourselves to a secular stagnation. Second question on Libra, Facebook cryptocurrency. Did Libra alarm the institution because it had a collateral and the central bank must do an expansive monetary policy? Thank you.
Thank you. Now, on Libra, we didn't discuss that in this meeting of the Governing Council, but we did discuss this quite extensively in the G7. So the bottom line of this discussion is that there is interest, of course, by the G7 governments, and I believe by all the governments in the world for this development. But there was pretty unanimous view that there are concerns as well as interest, and we get better first, and they better first address the concerns. And these concerns, if I can list them for you, are concerns about cybersecurity, AML, money laundering, terrorism financing, use of these currencies for criminal purposes. All this is linked also to the anonymity. How would this work? At the same time, concerns about privacy. I mentioned cyber risk, tax evasion, monetary policy transmission, financial stability, and the global payment system. How would this change the global payment system? So all these concerns are substantial. They need to be addressed before the regulators can have can look at this with genuine interest and positive interest. Now you mentioned the other thing. Are we resigned to be in a secular stagnation? No, we're not. That's why we have had this meeting today, studying possibility of actions in the future if there is no improvement. Thank you.
Mr. Ewing?
Jack Ewing, New York Times. Getting back to monetary policy, if there was another cut in the deposit rate, maybe you could talk about what that would actually accomplish. How does that feed through into the real economy? And then the second question on these committees, just I'm not sure I totally understand. They have a broad mandate. Does that mean they're supposed to stay within the tools that have already been used, or are they authorized to look at monetary policy tools that have perhaps not been used so far? And if so, what might those be?
Yeah.
Thank you.
You're welcome. The answer to the first question is, in a sense, the usual one is the transmission channel of lower rates isn't changed. It's the same. Policy rates affect the short anchor, the short-term part of the yield curve. Asset purchases basically affect the longer-term part of the yield curve. Both are relevant for investment, and so that is one answer. For the other, really, I should refer to the language, because just hinting that they may look at other instruments or other ways of reading this word, and would go beyond the discussion we had. It's broad, but it doesn't say that they should look at all costs at other instruments. This is the starting point. That's what we have, that's what we know, that's what's been tested over the last few years. And so they are asked to work on that. Then it says including, okay, we are looking forward to see new things, if there are any.
Mr. Retzius?
Thank you. Stefan Rexus, Wirtschaftswoche. My first question is a follow-up to Jan Marleen's on currency wars. And the latest remarks of Mr. Trump came on Monday, calling it, quote, very unfair that other countries manipulate their currencies and pump money in. Have those remarks been by Mr. Trump come up in the discussions of the Governing Council? And given that Mr. Trump addressed you personally after the Sintra speech, how do you respond to his continuing remarks in this regard? And my second question is, the French government has reportedly starting to lobbying for you to become the next IMF president. Would you be willing to take that job?
No, for me, I don't think so, because I've said that I would not be. Of course, I'm very honored by that, but I'm not available. So it's not an issue. On the first point, no, it didn't come up during our discussions. And in terms of the response to that, I gave it in Sintra. I said very, very simply, we have a mandate, which is price stability. Second point, we don't target exchange rates. Thank you.
And the final question goes to Mr. Schroers.
Mark Schroers, Börsenzeitung, thank you. My first one is a follow-up on the question about the economic impact of further monetary easing. You mentioned several times that the financial conditions are very favorable still, that credit growth is quite robust. So what exactly are you hoping for when thinking about further easing monetary policy? What do you have in mind on economic impacts on the real economy, not on asset prices, not on the exchange rate? And the second one is also on the inflation expectations. You mentioned several times the recent drop. Would you still argue that they are anchored when it comes to the medium and longer term? And do you already see the credibility of the ECB and of the 2% target at risk at the moment? Thank you.
Second answer to the second question first. No, I mean, our credibility is not tested vis-a-vis the 2% target. It's been tested so far to an objective of close but below 2%. And but I mean, answering to you is this, that we don't see the anchoring. We see a considerable mass of expected inflation moving to lower levels of inflation. And that's exactly what we are seeing. 1.6 is the inflation rate that we see in 2021 in our projections. And that's what the Governing Council said today in the introductory statement. We don't like it. And therefore, we are determined to act. And that's why the introduction of the word symmetry as to assert in the clearest way such determination.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Hi guys, welcome back. Third part and the last part of our today's meeting. We are covering ECB press conference. Actually, the press conference just ended right now. We have this euro spike to the upside. During the break, I've put the arrows related to yesterday high, right? So we saw this pullback. I put the arrow that might be with the, of course, with the question mark, that might be the bounce. So we saw the bounce. We are right now trading around this swing high here on the 5-minute chart. But yeah, the expectation of the bounce from the top of that range was correct. Still, I'm not chasing the market because of what we discussed as well. Based on the historic moves, I do expect some kind of the deeper pullback from here. I would like to see levels below 35 or towards 35, 25, 15. That's where I'm going to consider my longs if I'm going to get the confirmation on a smaller time frame for me to try to jump in. Just a reminder, had a tiny short, half of the exposure with very tiny stop, 7 pips, been stopped out on the short side. Been trying to trade the size of the correction, didn't work out this time. Squeeze to the upside on the euro dollar. For now, first retest of the yesterday high, we are trying to hold that one. Still, we have the option expiration within the next 29 minutes and then London fixing. So I think we might see some deeper pullback on the euro dollar, and that's where I'm gonna to try to take the advantage of the falling prices and trying to jump in and try to see higher levels toward the weekly open. Don't think today, maybe tomorrow. Now, very strong move on the euro Swiss franc. Right now, I don't think we are going to see below 110. So the green line here from the daily chart around psychological 110 level in case of the retest. That's where I'm gonna to look for buying opportunity. Because of the current price action, I'm skipping or postponing my plan of selling euro pound. All right. Because of the current overall euro action, right? And I've been looking for a little bit bigger bounce on DAX towards 12,500 to try to resell this one. Congratulations again. I didn't participate in that move. Hopefully some of you were able to grab this huge drop on the DAX. Unfortunately, I missed it. I was so focused on euro dollar, but it happened from time to time. Cable retest 25.20, so Monday high, rejection right now. So bears may want to try this, some call it over under. So we might spend some time inside the Monday range. Between the Monday high, Monday low, and the weekly open blue dotted line here, right? So we are trying to summarize. I'm not interested in US indices because of Google and Amazon later today. So I'm going to focus on European indices. I like to try to monitor DAX in case of the bigger bounce. Looks like the idea of this equal in size correction didn't work out. I haven't seen retest of 12,500 Niagara fall on DAX here. At least for now, euro is working based on the historic move, the size to the upside. So still believe we might see a little bit deeper pullback here. Any questions? I'm waiting for questions and reminder. As usual, tomorrow 8 a.m. Pre-London Open. We are going to coverage live here on Liteforex Global YouTube channel. But unusual, we are going to have afternoon meeting as well, mostly because of the US GDP data. So we are going to cover US GDP tomorrow live, also here on Liteforex Global YouTube channel. And we start tomorrow 2:15 p.m. CET or 1:15 London or 8:15 a.m. Eastern. You are more than welcome. You are more than welcome to join me. Now, I didn't yet make any kind of the update in relation to Bitcoin and Ethereum. We are trying to hold on Bitcoin. We are trying to hold the levels we were discussing before. Most probably later today, I will make short live stream. Finally, in relation to the crypto. I've been thinking about the stream yesterday, but really we were holding and it was not clear. Today we have a bounce from the very logical level, so I think it might be the case to try to discuss just short stream. So I will try to prepare something later today, maybe during the second half of the New York session, just strictly related to the crypto market. Now one can argue, because of the strong rejection on the DAX, why dollar yen is going higher. Maybe market just realized that overpriced the 50 basis point cut and is expecting just 25. So yields are helping here to dollar yen, but in case of the deeper move on the indices, I would be very careful here on the dollar yen. But right now, the possible demand is around 108.20. Trying to hold this 1170 option expirations level on euro dollar. And just a reminder, I'm still holding Aussie Kiwi long, and we are around the entry level, maybe 2 pips above. In case euro is going to hold the gains towards the end of the day, I'm going to go through euro commodities charts like euro CAD, euro Aussie, euro Kiwi. If there is something interesting, I will share with you tomorrow. Anyone still in DAX? Raise your hand, please. So totally inside the supply we were discussing, especially that we were discussing this morning. So not only ahead of the ECB, we also discussed it this morning. So this 1-to-1 is not gonna work. So I'm going to, the retest, only retest of the yesterday high, right? Work well here. Still. Now the crucial medium term, guys, medium term, not today, tomorrow, medium term, crucial is 1225, 1250. And especially 2 consecutive daily close above. That might change. All right. So if there are no questions, let's try to summarize slowly. So euro dollar waiting for a pullback towards in between, let's say 40.35 to 25.15 from the long perspective. When we are talking about the possibility of reshort euro dollar, I think there is no reason to try to chase it and look for shorts here right now, especially when you have this V formation created on intraday chart. So I think that the weekly open, so anything towards 12.25.50, and then eventually, in case of the expectations of the lower cut from the FOMC next Wednesday, that might be the case. Especially that if we are going to take the historical move, I mean, not trying to look anywhere longer than the latest June, right? So the size of this those two moves, two waves to the upside. So if we are going to make the measure from the bottom, that's what we did before. It's also showing the possibility of the retest of weekly open. So no reason to try to chase short side on euro dollar here. Dollar yen, let's have a look what we have from the higher time frame. Daily chart, we are about to break through the high we had on the 16th of July and 17th of July. So in case of daily close above, right, that might be some continuation towards even 109. In that case, we have 108.70 on the way towards these levels. Looks like we are trying to break through yesterday high, holding Monday high. So as I mentioned, and in case of the pullback towards 20, maybe 10, that might be the opportunity, but we want to see the pullback right now. We don't want to see the pullback towards end of the New York session because it's going to be towards end of the day, right? In that case, if you see the pullback later during the day, it means that we are going to create upper shadow, and it might be just the some kind of the failure. So be careful. I would like to see the pullback only towards the end of the European session, right? That's how I see the things. From the short perspective, looks like, as I mentioned, 70 might be on the card, if not even 109 ahead of the FOMC. So here as well, no reason to try to chase short side, especially if we are going to take into the consideration the move here as a whole one, right? If we are going to make it like this, you can see that it might be even 109.40. And if we are going to add this broken trend line, you've got the full picture, right? You've got the full picture. So yeah, it might be the case of trying to look for a buying opportunity on dollar yen. The only thing I might be, especially that we also have Bank of Japan next week. The only thing I might be worried a bit if we are going to make deeper move on indices, right? If we are going to dive deeper on indices, at some point the risk might switch towards risk off, and yeah, that's why I want to check Euro Aussie, Euro CAD, and Euro Kiwi around the end of the day. In case of the risk off and the positive euro development, we might see some unusual moves. So that's what I've mentioned at the very beginning of our meeting today. I do expect some higher volatility. Okay, that's how I see the dollar yen. Pound, it's all about Boris Johnson Brexit stuff. It's all about some kind of the profit taking on shorts euro pound. So for now, I would assume that we are going to try to trade inside the Monday range. So okay, we are testing weekly open, blue dotted line, but I would be careful. I would watch today's low eventually and stop count and towards 2460. So if we are talking about the range 2460, 2450 to the bottom and 2520 to the upside right now, check the reaction around the London fix, if it's a demand or if it's a supply of the pound towards London fix. Euro Swiss franc, that's what I've mentioned, and that's actually what happened, right? Even with initial reaction to the downside on other euro crosses, Euro Swiss was moving higher, so we got back above 110. 110 the first possible demand, and then again 109.80 towards 109.60 as a next possible demand zone. Again, would be very careful in case of the deeper risk of deeper move to the downside on indices. DAX looking for retest of 12,500, and that's where I'm gonna to look for rejection and trying to join the downside here on DAX. Quite unusual move on the gold right now. So yeah, with this move to the downside. Be careful with possible outside day. The low from the 18th of July looks like might be first possible demand if we are talking about the daily. So let me make some cleanings here. So we are talking about this low over here, right? And then again this low over here, and then again this low over here towards the bottom of that zone. Plenty of possible demand on gold, but right ahead of the Fed, that was also that's also been discussed by us. So we might see gold flying higher, but the final move to the upside might be done after the FOMC. So we might see the pressure on gold ahead of the FOMC. So if we were trying to get out from this intraday range, but we were not able to hit supply based on the weekly blue zone, right? We might treat it as a failure here, right? So we might look for stops below and 1380, 1360. Just remember our previous conversation about the gold. So I'm preparing this euro dollar stuff. Any questions? So if there are no questions, you think euro is up from here. Dixo, no, we created the full trading plan on euro. Of course, it might go straight. You don't have to follow our trading plan, and it might go straight towards the weekly open 12.15. That might be the case, but we have a plan, as I mentioned before, based on the moves from the June, right? There was some kind of the pullback, right? So what we did, we made the measure of the move to the upside. So we are breaking higher right now, but then we would like to see this type of the correction, which is here. So again, I'm not gonna chase the price, especially that the margin is getting lower and lower with possible longs, right? I mean, the risk reward is not gonna inside my range. I wanna see the pullback, and the pullback I want to see is between 40 and 15. This 25 pips range. And again, in my opinion, medium term, crucial is a 2 consecutive daily close above 12.25, 12.50. But overall, based on these historical moves here in June, when we made the size, it's weekly open. You are welcome, Dixo. You are welcome. So options will expire within the next 8 minutes in New York, 10 a.m. New York. So we are testing this first zone of the option 1170. Don't be trapped, guys, ahead of the London fix. We might see some more manipulation on the market. You don't want to be trapped. If there are no more questions, that's it from me today. Have a great rest of the New York session. As I mentioned, if there is a time and something is going on the Bitcoin, I will make the cryptocurrency update around the second part of the New York session. I'm going to make a short live stream here on Liteforex Global YouTube channel. So if you have a subscription to the channel, please click the ring the bell, and if I'm going to set up the meeting, you are going to be notified. That's the easiest way if you are interested in crypto. Guys, that's it from me today. It was my pleasure as usual. Thank you very much for your time, and see you around. Have a great one.